This is Kerry Artac with Artac Advisory. I'm shooting a new heating oil video. I haven't actually done one since last July. I didn't realize it was that long. Some of the information from last July is no longer valid, especially the near-term stuff. The long-term stuff that I'll be showing you in a moment has changed ever so slightly, so it's still there. But right now, let me just emphasize the fact that a few weeks ago, really, we had a settlement above this intermediate channel top because it was also above the high of the move low, which was the November low following the August high. So the November low, we closed the week, the following week above that high. That in itself is a sign of strength. That week, we also closed above this channel formation, which for the week of November 23rd is 1.1750. And then finally, the clear signal for me was closing above this extreme channel formation last week. This week is at 1.2348. So you really have a range of support now between 1.1750 and 2348, a band of support that can absorb selling through the rest of the year, and above which, 3 to 5 week target, January at the latest, I think, at some point of 1.5422, this ascending channel top. It's rising gradually. By the week of December 21st is at 1.5945. And once again, as per usual, I've got these numbers spaced 4 full weeks apart. You can subtract them out, divide by 4, and you'll have the exact numeric output for this ascending channel top, for instance, into later November and early December. This week at 1.5422, the week of Monday, November 23rd. These are all Monday numbers for the week in question. So this series of this channel, this band of support drops to 1.1574 to 2172 by the week of Monday, December 21st. I don't expect to see this area taken out to the downside anytime soon. This market is on a rally, and it should continue into this 1.50s, let's call it, over the next 3 to 5 weeks. Now, what I like about this area as it's a midterm resistance area, but it is merging late January, early February with long-term resistance. I'll show you the weekly chart first of all, and that is at this long-term descending one-third speed line off the 2008 low against the much more recent April, or say 2008 high, against the April 20 low. And so this speed line is a recent speed line, even though it looks like it's moving through all this trade. It didn't exist then. It does exist now. It is trend defining. It's at 1.7201 the week of Monday, November 23rd, drops to 1.7050 the week of Monday, December 21st. And this area continues to drop. This formation, so this area is coming down, and obviously this channel top is coming up. Some point in late January, the last week of January into the first week of February, just an FYI, that formation merges with this long-term resistance area. So this area is considered a realistic target. You could also see from the low to this high, we did some, the market broke. We settled above the flag, the descending flag that I showed you at the top of this. And so now we're in another leg up, which is similar in length, if you will, to the preceding rally from the April low into the August high. And so we're in for another one of these, in my opinion. It really begins on this chart at 63.80, which is the December 2018 low that held for over a year. And so, as we get into, well, it gets a little complicated. Let's just put it this way. If we test this area soon, and we just might over the next couple of weeks, it is a reliable, in my opinion, resistance area that could actually contain buying through the rest of the year. So if we test this area the last week of November, first week of December, it can absorb buying through December trade. From here, we could fall back. How far south is difficult. Nudge me at that time, and I will then update the support levels. But for right now, I think this descending flag is your base of support through the rest of the year, and above which we should test this area over the coming weeks. Now, if the market consolidates and actually takes its time reaching this upper area, and that takes into January to reach, well, then it actually takes on added significance, added meaning as it, and I'll just draw it here right now. Oh, bear with me here. I'm going to draw it, right now. It's a rough draw here, but it's roughly in this vicinity here. As we get into early February, late January, it all comes together, this formation. And this zone of resistance, 1.7201, the descending 1/3 speed line, is one that can absorb buying, I'm going to say at least through the first quarter, possibly into spring, summer of next year. And it's a significant upside continuation point into spring, summer. If we were to close it, now I don't have it labeled, but if we were to close above this area in the coming month or two, then you've got a 2.35 roughly as this top channel top is then I think what we'd say is about a 2 to 3, 3 to 5 month target. But I'm way ahead of myself here. Right now, I can comfortably say that we're likely to push into the upper 160s, low 170s over the next 2 to 3 to 5 weeks, a couple of months. That'll put us into January, where this area can absorb buying through the first quarter, possibly into summer of next year. And I think I'll just leave that at that. Now, downside. Let's cover the downside here. Even if we close below this area, we're off the buy signal into this area of resistance that I've already described. And I don't think it'll all fall apart. That would happen with a settlement below this low settlement price of 1.0839 that was put out the month of October. So we came off the August high, and in October the low settlement was 1.0839. If we close below that, then yes, indeed, I think 0.6585, this long-term simple trend line that actually captured the April lows, would be in play again. And this area is dropping ever so gradually. In February, it's at 65.19, so forth and so on. It doesn't become a target unless we settle any week below 1.0839, and then it becomes an objective, I'm going to say within 1 to 3 months, depending on volatility, this 0.65 handle area able to absorb selling through 2021, and above which, and this is big picture here, above which this 1.70s is likely as we continue into spring, summer of next year. I can't remember if I said as much in the last video. I want to say that I did because this was such a long-term test of support that when you test long-term support, this upper area becomes a viable objective. And it actually is now a clear target, having settled a couple of weeks ago above this area of resistance. So this is our floor of support. I'll leave you with this, and above which the 1.54 to 59 area, depending on its timing, is expected over the next 2 to 3, 3 to 5 weeks. If it takes longer, if it pushes into later January, that area becomes added significance as it merges with, I guess I'll show you this one more time, this 1.70s, low 1.70s. And this is our objective. It will remain so through the rest of the year and into early next, by which point we could top out well into 2021. That's all I'm going to say, actually, for this particular heating oil video. So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.